We all invest differently, and that's the beauty of it. Every portfolio tells its own story. And if you've been around here for a while, you already know that my story is heavily shaped by dividend ETFs. My long-term mission is clear. I want the majority of my income to come from dividends so that I can move closer to real financial independence. Some of you have been curious about my portfolio, so today I'm taking you behind the scenes of my personal investing strategy. In this video, I want to show you how my dividend portfolio looks right now, without going into the exact portfolio value. I'll explain why I invest the way I do, what I like about my portfolio, and what I'm not so happy with. I'll also share the portfolio adjustments I'm planning in the near future, so stick around if that sounds interesting to you. As always, this is not financial advice, just my personal experience and the way I choose to invest. And here it is, my current dividend portfolio. Right now, I only hold 4 ETFs. I'm not showing any absolute numbers because they're not really important here. My portfolio is still relatively small, and I continue adding to it every month. It will take time until I can fully rely on my dividends, but my average monthly dividends are already consistently in the low 3-digit range. All right, so what exactly do we have in this portfolio? My largest position is the Fidelity Global Quality Income ETF. I've mentioned in earlier videos that this is my favorite dividend ETF. It focuses exclusively on high-quality dividend companies, with an emphasis on stable and growing payouts. The initial dividend yield is relatively low. In past years, it has been somewhere between 2 and 3%, which is not unusual for dividend growth ETFs. Number 2 is the SPDR S&P US Dividend Aristocrats ETF. This one also focuses more on dividend growth than on high dividend yield. It includes only U.S. companies that have increased their dividends for at least 20 consecutive years. The price performance has been rather weak in recent years, mainly because U.S. value stocks haven't attracted much interest lately. Still, I believe in the Aristocrats approach and really appreciate the stable and steadily rising payouts this ETF delivers. Now let's move on to the iShares MSCI World Quality Dividend Advanced ETF. It's similar to the Fidelity ETF, globally diversified with a focus on solid dividend-paying companies. The dividends are relatively low here as well, but the total return has been strong, and hopefully we'll see decent dividend growth in the future. So far, I'm quite happy with this ETF, and I have no plans to sell it. The Vanguard FTSE All-World High Dividend Yield ETF is the most recent addition and still makes up a relatively small part of the portfolio. I'm currently building up this position. The goal is to bring this ETF to around 20% of the portfolio. By the way, I've already made videos about all of these ETFs on this channel, and you can find the links in the description. If you enjoy my content, a like and subscribe means a lot. Thanks. Let's take a look at the sector allocation of the portfolio. 20% information technology, 15% financials, 13% industrials, 10% healthcare, and so on. I'm quite comfortable with this allocation. But if we look at the regional breakdown, it becomes clear that my portfolio is heavily tilted toward the United States. I like investing in the U.S., but 75% is a bit too much even for me, so I'm working on bringing that number down. All 4 ETFs pay out on a quarterly basis. In this dividend calendar, you can see the official payout months. But in practice, most of these ETFs pay right at the end of the month, so the money often arrives in my account only in the following month. That's why I more or less receive some kind of payout almost every month. No portfolio is perfect. There are always some pros and cons. So let's take a moment to quickly evaluate this one. Let's begin with the pros. Quality companies. These 3 ETFs hold mainly high-quality dividend companies, even if the initial payouts are on the lower side. Dividend growth. The Fidelity ETF and the SPDR ETF focus on dividend growth, even though that hasn't worked perfectly in the last few years. Dividend growth is very important to me, and I'm happy to accept a lower starting yield in return. Let's take the 7% dividend growth of the SPDR ETF as an example. At that pace, the payouts of this ETF double roughly every 10 years on their own, which is a major strength. Total return performance. Unlike many high-yield ETFs, these offer solid potential for price appreciation. Here you can see the total return of all ETFs. Looking at the last 7 years, almost all of them delivered an annualized return of more than 10%, which is a strong result. Worry-free ETFs. I can hold all of these ETFs forever without having to worry about anything. This is especially true for the Vanguard ETF, because it's the most broadly diversified dividend ETF you can get. And even if we look at the SPDR ETF, which only holds U.S. companies, these are dividend aristocrats. They will keep paying reliable dividends no matter what's happening in the U.S. economy. No sector concentration risk. As we saw earlier, the sector allocation is nicely balanced. Not 40% financials or 40% tech like in some other portfolios. All right, now let's take a look at the weaknesses of this portfolio. U.S. concentration risk. One thing is obvious. The United States is extremely dominant here. Being invested in the U.S. was great over the last 10 or 20 years, but that doesn't mean it will stay that way forever. The current weakness of the U.S. dollar is already very noticeable in my portfolio. Dividend yield. This portfolio pays just a little over 2% in dividends. That's far too little. Patience required. Since this is not a high-yield portfolio, but more of a dividend growth portfolio, I'll need many more years before the really big dividends start rolling in. I don't have any more cons. Am I missing something? If you can think of any other downsides, feel free to share them in the comments. All right, let's move on to how I'm approaching this portfolio from here. I plan to keep investing in all 4 ETFs. The Vanguard ETF is supposed to make up around 20% of the portfolio, so that's the one I'm adding to most aggressively right now. Another point relates to the downsides we just talked about, especially the low dividend yield. I'm currently thinking about adding a high-yield ETF and giving it around a 10% allocation. These are the candidates on my watch list. Adding one of them would probably slow down the overall dividend growth rate a bit, but that's a trade-off I'm willing to accept. That's it for my portfolio. Now tell me, is your portfolio more focused on high yield or on growth? Drop it in the comments. That's it for today. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.